afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The U.S. dollar index and the dollar itself are coming back here today. It wasn't really the CPI data, which came in stronger than expected. It really wasn't the ZEW, German economic sentiment, that came in much worse than expected, the worst level since December 2011. It was that the fact the trade war is being postponed right now. U.S. and China are going to meet in about 2 weeks. And President Trump, he said he's delaying the next round of tariffs to help the people. Now, with the trade war at a height right now and escalating, it's in deteriorating conditions abroad, it's heightened the Fed cut expectations. So right now we're seeing risk sentiment come back here today with this delay, and ultimately what that's done is price out the odds of Fed cuts down the road. So the dollar has come back. The dollar index does face some resistance in 97.80. The same way the euro is facing support right at our level that we had in the FX Rundown written section yesterday, 112.01. So take an eye on that. But heading into tomorrow, we have a lot of data, GDP. Now, this is the first look at German GDP data early in the morning, about 1 a.m. Central Time. You have the second look at the Eurozone numbers later in the morning. But that German number is going to be pretty crucial because it is a contraction. So we've got to see how deep that contraction is. It's coming worse than expected. This could be something that could push the euro over the edge of that 112 mark and then back down to a major 3-star support. It's on the FX Rundown. First, though, tonight we have a deluge of data coming out of China. This is our favorite trio: fixed asset investment, industrial production, retail sales. You also have unemployment data. Now, if this comes in worse than expected, you're going to see that drag on some of the risk currencies, the euro, the Aussie, and the Canadian. So keep an eye on that tonight. But remember, we're moving into a pretty interesting level in the dollar index and down to a pretty interesting level in the euro. Now, if we move below here, you're going to start to see additional selling in the euro, and then the dollar could gravitate back up to those recent highs. So look at that data coming into tomorrow. And remember, CPI data today for the U.S. came in stronger than expected. This is the second month in a row. So we're seeing firm inflation, and that in and of itself is going to start to price out rate cut expectations if that continues. That's the second month in a row. 3's a trend. What did take a hit today was the yen. The yen was down sharply. All safe havens were down sharply. Started with the stronger sentiment, it started with the stronger CPI data, but really the risk-on move here. We saw the S&P rip about 60 points in about half an hour. The yen took it on the chin, and it is down more than a point. But we're moving into a level of major 3-star support. It's on the FX Rundown. There's a lot of support down here, 93.60, and a couple minor levels down closer to 93. So watch how this reacts. You don't want to try and catch a falling knife here. However, look at some of the other safe havens. Gold held 1,500. It did ping real quick. Our major 3-star support at 1,485, back up to 1,515 area. The 30-year bond, it's not moving lower. It's refusing to move lower. But you have the 10-year and you have the 5-year down just as much as the 30-year bond. Watch for that inversion of the 2 and the 10. All of this works towards the global uncertainties, the potential recession, and that all is bullish on safe havens in general, and thus the gold complex, metal complex, and the yen as well. So keep an eye on all of that as we move in to tonight's data on China, which is also going to help risk sentiment. Remember where those support levels are, but overall the trend is still up in the yen, but this does make us take a step back. Remember, we said above our pivot yesterday on the FX Rundown, take a look, the level's there, then we remain bullish. We're not above there anymore, but we are at a pretty crucial level of support. And again, you don't want to catch a falling knife. Now, for the Aussie dollar, it did benefit on this news. We're back above 68. There's still a lot of resistance above here. Remember, we talked about yesterday a textbook breakdown in the Aussie dollar, but now we have a higher low. So does this risk sentiment carry in? And it's going to depend on the Chinese data tonight, so keep an eye on that. Same thing with the Canadian dollar. Crude oil roared higher here today, but we also have EIA data here tomorrow. So keep an eye on that. Canadian dollar being constructed above 75. However, you got strong resistance just below 76. Take a look at it on the FX Rundown from last night on the written section. Give us a call. We're here to help with anything on the board, 312-278-0500. You can email us, info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial to research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.